I wanted to break down my question of the day, which is how much house can I afford to buy? Well, it's just a big math problem like anything else in mortgage, but there's a few things we look at, and number one is income, number two is debt to income ratio, credit score, and down payment. Now, industry rule might be your housing ratio versus debt to income ratio, or like 28 for housing and 36 for debt to income ratio. Now, your housing ratio is the ratio of your gross monthly income to the potential house payment. So for easy math, let's say your gross monthly income is $8,000. Well, we can use about half of that to cover your new house payment and all your other debts. But the housing ratio is just the relationship of the new house payment to your income. So in this case, say the house is $3,000. Calculator out here, we're gonna do 3,000 and 8,000. That gives us 37%. So in that case, you'd just be your housing would be at 37%, which I know the 28-36 is industry ideal, but the truth is anything under 40 is pretty okay. So we talk about debt to income ratio. Debt to income ratio is the new housing payment plus your current debts like your car payments and credit cards and what have you. So let's say you have a $3,000 house payment and a say $600 car payment plus $400 in credit cards. So that makes $4,000. So we do 4,000 and 8,000, and that would give us a 50% debt to income ratio, which is about the highest you want to go. You can stretch it a little bit on an FHA and maybe on a VA loan, but for conventional, 50% is kind of the max. So that's our debt to income ratio. We look at credit score. Credit score will kind of open the door for different programs. So FHA, your lowest credit score is going to be 580. Conventional, it varies, but you're looking at probably 680 plus. And then there's other factors like mortgage insurance, and again, that's for another time. But yeah, so your credit score, the better your credit score, the cheaper your loan will be. Whether you're trying to buy points for your rate or what have you, credit score makes for a cheaper loan and generally makes for a better loan experience just because it's easier to qualify with higher credit. Again, anything over 700, you're pretty good. Let's see. Then there's investment loans, and most investor loans, they're going to have different parameters, but you're still looking at that 680 plus for credit. What else do we have? Down payment. So down payment's going to vary. FHA loan minimum down payment is 3.5%. So on a $400,000 house, you're looking at about $14,000. And FHA loans in Maricopa, max loan amount is going to be just over 540. So any loan amount over 540, then you're going to have to do a conventional loan, and that's when your credit would need to be a little bit better. Conventional loans you can do as little as 3% down. 5% is the norm, and there's benefits to doing different down payment amounts, but there's, like I said, whether you're trying to get your payment lower or reduce your mortgage insurance, there's all different kinds of reasons for having a large down payment. But 3 to 5% is pretty standard on a conventional loan. And with VA loans, you don't require a down payment. Those are 100% financing. There's reasons you might do a down payment, but for the most part, you wouldn't do that on a VA loan. And of course, we have our down payment assistance options where the state or some entity is covering your down payment. And again, there's different benefits and downsides to that. But for the most part, that's the home buying. How much home can I afford in a nutshell? And if you have questions or just want to run some numbers, you're welcome to give me a call or just shoot me over an email, and I'm happy to help you. All my contact information is below this video. Hope you have a great day.